A lot of.
Yes, I have now. So I'm here with Ron Conway. Hi, Ron.
Hi.
We're here at the beautiful Half Moon Bay, the Ritz-Carlton,
At
the Always On conference. So you were just on a panel about will the real seed investors stand up. So what was the takeaway from?
I think the takeaway is that there is a lot of capital available for startup companies in Silicon Valley again, since the rebirth of the internet via Web 2.0, and that entrepreneurs seeking funding have a good chance of being successful, but there's still a lot of rules of the road that they should heed in their quest for capital.
What are those? What do you mean rules? What are?
Well, do a good job, of creating an executive summary for your company.
Right.
Do a good job of analyzing which angels are best suited for your company. In other words, if you have a consumer internet company, try and find the 5 or 6 angels who have invested in the most successful consumer internet companies. So let's say you're doing something consumer internet and it's in the news space. For sure, go find out who invested in dig.com and see if you can get some of those investors interested in your company, because those investors know your space and will be more familiar with it and hopefully can make a decision quicker to invest in your startup.
All right. So what did you think of Facebook's valuation?
Facebook's valuation, the $15 billion is probably a high valuation today, but the valuation was a result of Microsoft at the same time as doing the funding at that valuation also signed a commerce relationship with Facebook, where Microsoft would be delivering a lot of the international ads for Facebook in a multi-year contract. That contract itself is worth a lot of money and actually contributes to a big piece of that $15 billion valuation. But it's a great event for Silicon Valley because Facebook now has a war chest of capital to hire more people and continue to serve up great content to its user base. At
some point, you and I spoke before, last year, and you talked about how companies should look to sell themselves to Google and Yahoo and the other big internet giants, and maybe now people have started saying they should sell themselves to Facebook.
It's interesting how the market is morphed. 3 years ago, maybe Facebook had some criticism that they didn't sell to Yahoo for $1 billion.
Yeah.
And now Facebook has a war chest because it's such a great product and a great community that even they can go out and do some big acquisitions. So it shows that keeping your head to the grindstone and building metrics on your website, you can build a great asset. Even in the social networking space that 4 years ago everyone thought MySpace owned that space, and now you have Facebook, Bebo, you have other communities like Habbo Hotel and Second Life. The opportunity in this sector is huge, and this is a reflection of that.
Now, tell me, how many companies did you invest in this year, and are you still looking right now? And if you are looking, what are you looking for?
I've probably invested in at least 40 companies this year. In the last couple of years, I've invested in about 140 companies. I do get help from my associates at Baseline Ventures, who help me vet out all the deal flow, and then I co-invest with Baseline Ventures. So at least I have help. And we really like the consumer internet space. We like internet video. We think internet video is in its infancy today. Believe it or not, we think search is in its infancy today. Look at your search results and think about how much better it could be. So we actually think Google is a young company with huge amounts of innovation ahead.
Even at $220 billion.
Even at $220 billion, look at the amount spent on network advertising today, and the billions of dollars that can actually still be transferred over to web advertising and marketing, which I think is even more effective. We're looking for deals in the social networking space, in the gaming space, in the behavioral targeting space. These are all very, very high growth sectors that we think are still in their early stages.
Should anyone, I noticed that there are a number of these networks or smaller companies kind of worried about an advertising or a recession in general. Should they be worried? Should they be looking to start selling themselves? If everybody's again going after this advertising pie, and I sense that they fear that 2008 or pretty soon, it may dry up.
I don't agree that people should be panicking about the number of ad dollars available. If you look at the ad dollars spent on TV and radio, it still dwarfs the amount of advertising that is done on the web today. So I think web advertising is a lot more effective than TV and radio, and for that reason, TV and radio advertising dollars are going to keep converting at a rapid pace to the internet, and that will allow the internet ad marketing to thrive for at least the next 3 to 5 years. I think it's good days ahead. Now there'll be lots of M&A transactions to provide liquidity for companies in this space, because the IPO market is still pretty deflated.
Wait, M&A, where are we going to see more of it next year?
I think we'll see a lot of M&A in all the sectors, but especially consumer internet and social networking. I think there'll be a lot of acquisition in gaming. The monster deal between Activision and Blizzard, I think, bodes for what is coming ahead. In the smaller companies in the gaming sector, I think there'll be a land grab there, and therefore a lot of M&A.
Okay. Final thoughts, Ron? Parting thoughts?
I think 2007 has been a phenomenal year for innovation in Silicon Valley, and I don't see that continuing anytime soon. It's a great time for entrepreneurs to be starting companies and contributing to the growth of Silicon Valley.
Great. Thank you.
You're welcome.